This is my third video on the China real estate crisis. I did a video on September 21st, 2021 on the Evergrande situation, and a follow-up to that video March 10th, 2022 titled China Real Estate Property Crisis Bubble is Coming. I was right. They are screwed. Investors brace for $130 billion loss as China's housing market falters. Investors and Chinese developers are pricing in. They already got it priced in at least $130 billion of losses as they anticipate a grim future for the nation's faltering housing market. 2/3 of their dollar bonds are trading below 70 cents on the dollar, a signal of distressed debt. That's according to the Financial Times. They reported, and they cited Bloomberg data. So Beijing needs to start a full-scale bailout instead of the narrow steps they've been taking. Because home sales dropped by 30% in the first half of the year. Maybe they were hiding that data. So I think we need to take a step back to get a better understanding of the current situation in China. Things are so bad. They're so bad. A month ago, China approved $44 billion bailout to finish incomplete developments. And this move only comes after homebuyers threaten to stop payments on incomplete projects. So the state council passed a plan to establish a fund worth up to 300 billion yen. That's roughly 44 billion to support multiple property groups, propelling gains for an index of mainland property stocks for a few days. Unfortunately, the rally fizzled by the end of the week. So government officials have begun to censor in social media posts about the boycott, and housing officials vowed to better monitor developers' use of the funds. Okay, I bet they're going to do that. The Evergrande chairman and the chief financial officer were forced to resign last month amid an investigation into whether some of its deposits were used as security for others to borrow from banks. Not too smart. So local governments across the country that have had to assume responsibility of some of Evergrande's stalled developments, they reached out to state banks and asset management companies for money to help finish them, but no one picked up the phone. It's not good. So today things are getting worse. The numbers don't lie. They can't hide this anymore, and they are absolutely horrific. When I analyze this data, 300 million of dollar bonds sold by the Kaisa Group, Kaisa, which mature on September 7th, are trading at 9 cents on the dollar. That's 272 million loss. Shimo's SHIMAOS, 300 million of bonds fetched just 10 cents, suggesting a loss of almost 270 million. Traders are marking down the debt after Chinese developers missed payments on 31 billion of bonds this year. That's a record. There's a good reason these bonds are trading at distressed levels, and that's from a Hong Kong banker who has the Asian debt syndicate for a European lender. So the odds of a lot of these guys ever repaying is not anyone's guess. They're not going to repay it. So take, for example, Country Garden Holdings. That's been ranked for years. I heard of these guys a long time ago as China's top real estate developer by contracted sales, reported a 96% drop in first half profits. That's according to the Wall Street Journal. I mean, take a look at this chart below. Shows the change in China's real estate climate index, which measures the aggregate business activity in land sales and real estate. It's not pretty, not good at all. And this chart shows new house sales have slumped substantially this year, with values dropping by 22% compared to the same time last year. Horrific. Check out this. More than 60% of developers have hit at least one of the debt thresholds set by the regulators in 2021. The 3 red lines can't be crossed. Red, no new interest-bearing debt is allowed. Orange, new interest-bearing debt growth must not exceed 5%. And yellow, new interest-bearing debt growth must not exceed 10%. And green, new interest-bearing debt growth must not exceed 15%. So Country Garden, my God, which is considered one of the country's financially strongest developers, tallied a profit of $89 million during the first 6 months of 2022. That's down considerably from the $2.2 billion it ranked in during the same period in 2021. A lot of Gulfstreams were bought. So more than 30 Chinese real estate companies, including China Evergrande Group and Sunshine China Holdings, have defaulted on their international debts, and privately run developers have issued profit warnings. So problems in real estate is it's a big piece of the pie for China's broader economy. The number of people whose livelihoods are dependent on the real estate sector expands even further when including industries that are contingent on property holdings, ownership, and distribution, such as wholesale and retail. So if you look at this chart, it clearly shows the property market plays an outsized role in China's economy. Its position in the economy is further complicated by the way it engages with various areas of society, from homeowners to local governments. It's way out of hand. The Chinese government's crackdown on excessive borrowing, so they say they're doing it a little bit, has sent developers scrambling for funds with less money to invest in U.S. markets. So the company also suggested that despite a depression, it believes China as economy is resilient, and urbanization in the country has positioned it for long-term growth. They can try and sugarcoat this BS. They were in deep trouble when I did my earlier videos. They are in a deep depression. Make no mistake about it. The broader issue that I'm concerned about is the property market crisis will drag the broader economy down with it, hitting suppliers, small, medium-sized companies in construction, as well as household consumption. And dangerously, the banking system is very fragile, has at least a quarter of its assets in property, a quarter. So the belief that property developers will be insolvent, and I think buyers need to hold off their purchases, and financing is going to dry up. So some monetary easing and relaxation in the mortgage market is not enough. Stimulating demand by loosening mortgage lending won't solve the problem, and a proposed bailout package will, probably not move the frickin' needle at all. So the government would need to offer much more relief to property developers despite their past, unscrupulous behavior. I tell you, I'm dealing with these developers throughout my career. So the government will need to send a much stronger message and install confidence. That's what Mo Bin. He apologized to investors for the sharp drop in profits during an earnings call. Mr. Mo said the company will keep adjusting its strategies and focus on keeping a balance between its cash flow, assets, and debts and profits. I will leave you with this, the Country Garden chairman said. The Chinese property market will return to a stage of healthy development by next June, he predicted. Well, don't hold your breath, because, when I was delving into this almost 2 years ago, the writing was on the wall. It's just, they're overextended. They got a lot of the assets and the property and the developers. And I have experience with the development for many years. And, it's a lot of shenanigans out there, and you really got to be on top of your stuff. And this is bad news, because not only in the Chinese economy, like I said, investments dry up in the United States. It has a broader effect on the U.S. economy. We all know how fragile our banking system is right now, what's going on. So this is out of hand. These people know better. It's just stupid, and it's all about greed. And now they got themselves in a pickle. Take care.